The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning or good afternoon. How about that from TFNN? Welcome to the November 20th. Fantastic and fabulous Friday edition of today's Trader's Edge show. Of course, if you're on the West Coast, good morning to you. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one as well as an extraordinary weekend. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. And that's what it's all about. Today, you and I, during the next hour, we're going to go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I as of about 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. That way we can both go looking at the markets, try to figure out what they are doing. And, hey, it's Fabulous Friday. Of course, it is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 108 points, trading at 17,840. S&P is off 11 points, trading at 2,092. NASDAQ Composite up 35 points at 5,108. Russell up about 11 points. She's trading 1177. The DAX closed up 34 points. The FTSE closed up 4. Gold is trading off $1 right now. Silver is down a penny, 2 pennies. Light sweet crude up 29 cents, trading at 40.83. Natural gas taking it in the shorts out here. High grade copper back a bit. Google is the leader dollar-wise to the upside in the markets, up 19 bucks. Allergan is up about 10. Sarepta Therapeutics up 31%, up about $8 right now. To the downside, you've got Chipotle Mexican Grill off 11 bucks. Nimble Storage, not too nimble. That's, oh my goodness, down 50% in IPO. Is that off? That's 50% today. I don't know. It's not too nimble, whatever it is. Mentor Graphics down 32%. Some of these equities taking some big hits. You know, when we take a look at individual equities and they take those big hits, to me that's really the best place to use our volume metrics to identify where price is headed to, which is really back to a breakout area, a support level. And we'll take a look at that today. Several questions, several emails about volume. How do I use it? How do I take a look at it? And so forth. So we'll do that. Had questions about the euro-yen currency pair. We haven't taken a look at that for a while. So we'll certainly cover all of those items as well as anything else that you would like to. But let's first begin by figuring out what the message of the markets is as of 1:10 in the afternoon. And the easiest way to do that is to take a look at where the wars have been battled here lately, and those wars being the price oscillator lines. For the New York Stock Exchange, NASDAQ Composite, if you watch us on TigerTV, left-hand panel is the NYSE. Panel next to it is the NASDAQ Composite. Panel next to that is the Dow. And then the final panel on the right-hand side shows us the S&P 500 and the VIX. Now, if we take a look at those price oscillators, again, just a nice little momentum measurement tool that tells you who has control of the ball. And at this stage, at 1:10 in the afternoon, it's the bulls that have control of the ball. They've finally been able to move the price oscillator above zero. The reading inside the New York Stock Exchange is 18. What that means is just simply that there were enough net advancing issues today to push that reading into positive territory. We'll take a look at the NYSE, which is trading right near its 0.618 retracement level, which is 10,450. It's trading at 10,469. Price is likely to head up to the 10,534 level, as long as at the end of the day, the war is won by the bulls, because this is really an end-of-day tool. So I'm giving you a glimpse of what it looks like as of 1:11. But the question is, not at 3:59, not at 3:59 and 30 seconds, but really at 4 o'clock. what does that reading look like? Sometimes it's just a little bit past 4, but all the numbers are truly in. Inside the NASDAQ composite, its price oscillator above 0. The Dow price oscillator above 0. Inside of the S&P 500, the most important thing is where is the VIX index. And if we take a look at the VIX index, it's trading out at 1576. The 50-day exponential moving average is 1764. That says that it wants lower price. You might say, where's the VIX headed to? I will tell you that the next target is 1482, give or take a few shekels out there. So if, in fact, the VIX continues to move down to those levels, we will see the market move sideways to higher. It'll be one or the other. Now, the other level to really be watching today inside of the ES Mini is 2093.75. Not to be exact, but I am exact to the tick on this one, 2093.75. And that level has acted in essence as resistance. So it does make me say, something to think about. Right now, you've got the ES Mini trading out at 2,088. So that's another key level to be watching as we take a look at these markets. Now, so everything is set up. Now let's go take a look at some volumes out here just to get a feel for what's going on inside the markets here. Let me switch over because I haven't done that. I should always just make sure that I leave it open to this page. So inside the Qs right now, for example, we've done 12.1 million shares. So we've got light volume inside the market. I can tell you that just by looking at this. The SPYs, 52 million. And the diamonds, well, the diamonds have got volume, 6 million. What that equates to is inside the Qs, probably a day of about 19 million shares. Now, that would be quite a light volume day. One of the signatures when we take a look at volume inside the markets, let me, well, I don't know why I have the Dow up here. Wanted to go take a look at the Qs. There we go. Let me turn on my volume bar out here down at the bottom. 19 million shares would be, if that's in fact what happens, that would be a very light volume day. And the Qs, what they do is, in the way that I like to use volume inside the Qs, is they make tops with light volume. Now, typically, it's about a 10-day average out there that you really take a look at. That doesn't always have to be, but it is pretty good to see that type of, like Tom likes to call it, David White likes to call it, distribution up at those highs. And if you can get that light volume for about 2 weeks, then you've really got distribution. You're not going to see distribution on one single day. It doesn't even make sense that you would see distribution on one single day. So about a 2-week time frame is a good time frame, to get all that distribution done. Nonetheless, you got to pay attention to light volume days. Now, let's just go see, just for the heck of it. November 4th was the most recent high. There was about 28 million shares up there. Looks like we're going to come in lighter than that. July 20th, about 26 million shares. Again, the current pace is more of about a 19 million share day. A little high out here on June 24th, 15 million shares. That could have been one of the lightest volume days in the year. If we look at April 27th, 30 million shares up there. March 2nd, 22 million shares. And what I'm doing, folks, I'm just moving back and forth into swing points that identified, short-term tops. And we've been in a market that basically hasn't gone really anywhere. And the NDX 100 composite, that's not true. But the S&P 500, certainly New York Stock Exchange, hasn't really gone anywhere. Back in 2014, up at November, the high up there, volume of about 17 million shares. So when you see this type of light volume at the highs, and it is a better signal when you get it for a couple-week period of time. So building up to it, right, you can have distribution and still have price moving higher. You just want to see it do it on lighter volume. And over a period of time, that makes sense. Right? Just makes sense. So, and do we have that here? What's our 10-day average? Well, you got 30. I've really got to update my spreadsheet, but 33 million 4 or 5 days ago, and then 30 and 32 and 26. So, no, the volume's actually been a bit too high for that. In any event, if we do take a look at what the Qs are doing individually today, they are trading up into the swing point from November the 4th, and that price point is 114.54, 114.46. It's been up as high today as 114.57. So it's tagged the swing point. If it closes below 115, 114.54, you'll clearly have a failure on price, and it would look like you would also have a failure on volume as well. But you just can't use that individually. What do I mean by that? Folks, if I were to ask you to build a table, if I were to, whether you're a carpenter or not, I just simply commissioned you and I said, I want you to build me a great table. Now, you might even have a design in your mind right now what that table would look like. Some of you might build me, some type of oval table. Somebody might be a circle. Some of you might build me a rectangle. Some might build a square. You'd probably ask, well, what room am I going to put it in? Some might have some nice shape to it, right? But here's the deal. If I were to ask you to build that table for me, what you would do is, how many of you would build a table and put one leg to hold that table up? How many of you would actually do that? Pretty much none of you, unless you're going to go ahead and cement that leg into the foundation of the house out there. But that's not typically realistic. I'm not asking you to build me a table for the backyard. I'm asking you to build me a table that I can, eat a nice meal on. And you wouldn't even use two legs to hold up that table. Now, some of you might use three, depending on the shape of it. But most of you would use four legs for the table, right? And when you drive a car, and you're trying to, is a car more stable, more solid than a motorcycle if you're going to try to transport yourself? And of course, the answer is yes. And not that two wheels. I mean, you can have a me, you're not going to be riding on a unicycle. And if you got a motorcycle, you lean too far one way or the other, you might drop her on the ground out here. It's one of the reasons why cars have four wheels. So you've got four wheels. We take a look at four in our life. You've got four legs in a table. The market is really the same way. Why would any of us think any differently? It's really the same way. You can think of a lot of levels or a lot of areas in your life where four helps you to create this better stability. And in trading, take a look at the Great Pyramids that were built out there. Of course, the Great Pyramids were built when, 2500 BC, something around that time frame out here. And in trading and investing, there's also a pyramid, but I like to have four legs inside my pyramid. And volume is only one of those legs. If you are making all your decisions based upon volume, you're basically asking yourself or commissioning somebody to build you a table with one leg. And you wouldn't do that. And if you wouldn't do that for that, why would you do that when you're putting your money at risk out there? You wouldn't. You see, when it comes to trade investing, you need to understand the supply and demand. You've got to understand what the momentum is behind the move. We must understand the liquidity or the volatility. And it's really helpful to understand what's the power of that energy or that angle that's out there. And we've got great tools in order to do that. So when we take a look at this, or when I communicate, with you, on the radio show, and it's why we take a look at a number of different tools out here to help us understand what the market is doing. One of those areas that we talked about. So we just took a look we used one tool here for supply and demand. We can also use our TAS market profiles for supply and demand. So we've got two volume metrics that you and I use each and every day. When we get back, let's go take a look at one of our liquidity gauges, because it's just not acting right now as the market moves higher. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. This week we've looked at a number of different things out there. And to go back to our trading pyramid concept out here, remember, so you got four areas of the market that you and I want to understand what's going on. Volume. And, two of the great tools that we have is volume. Now, if you're trading currencies, you're trading, some commodities out there, sometimes the volume metrics aren't really going to assist you. So you're looking for other things. That's where the TAS market profiles are really a wonderful tool to help us with regard to volume. With regard to momentum, right, so you got volume metrics, so supply and demand. We've got momentum. We've got volatility and liquidity. We're going to go take a look at that in a moment. But if we just simply go take a look at the markets right now, with regard to momentum, one of the tools that I shared with you earlier, maybe you didn't catch that show, and it was a few days ago or so, but, and where I gave you the story of how I came upon this tool, because I was really simply trying to analyze all of the different celestial patterns, planetary alignments, P-index dates, things of that sort to help identify tops and bottoms inside the market. And this is the stock chart of the Dow that goes back to 1896. So I've gone back and I've gotten as much historical data as I can, and the same patterns that worked back then, they work today. They're always going to work, and it really helps us to understand when the momentum, either to the downside or to the upside, and one of the great indicators out there, and there's more. I like using the relative strength indicator. Basil Chapman, for example, he loves the stochastic oscillator. It doesn't really matter. You just have to find one that works that's going to give you the better signals. For me, it happens to be this one, but just find something that you can use that provides you with an excellent signal. This top out here that we looked at in 1896, November 13th of 1896, is really a perfect example of why you want to pay attention to those. Now, that was a daily chart that we were looking at. If I switch over and just take a look, what has me a little bit concerned here as I put this together for you, what has me a bit concerned is the fact that on the 2-hour chart, so not a 30-minute chart, but on a 2-hour chart, as an example, we'll take a look at the NQ out here, is price has been rising. It basically completed a 1-to-1 A to B equals CD as it got up to about the 46.96 level. But as it was getting up towards this last leg here, and when I say last leg, I'm just really coming back to 5 a.m., 6 a.m. on yesterday morning. So since 6 a.m. yesterday morning, any moves to the upside have been on less relative strength, less momentum, right? If we take a look at that one indicator out there. Now, we don't really have any kind of bearish reversal signal just yet. So the sellers have not shown up in droves or anything, and price will continue to move higher until they show up. It's just like a battle. It's just like an army. We're watching the Bulls and the Bears. We're watching the football game. It really is that simple. We don't want to overcomplicate it. Now, the thing is that now the NQ has been arguably one of the strongest indices out here. If we take a look at the Dow, which has had great price movement, the Dow, is close to making its 1-to-1 A to B equals CD to the upside. But you see, it's actually moving higher. With the highs that it made earlier on the 2-hour chart were with strength. You can see those lines on my screen. They stopped drawing to the upside out here. So we've got a mixed message. The Dow says, yeah, you know what? I don't care what you're doing, NASDAQ. I'm willing to take over the battle here. If I take a look at what the S&P is doing, well, the S&P is the one that's actually, now it has not completed the 1-to-1 A to B equals CD to the upside. That price projection would be 2106. Again, if the ES gets above, actually, the number I gave you, 2,000. What did I give you? 2093.75. It's going to change on Monday morning. I'll have a new number to take a look at. I think it's. Now, maybe it's around 1 o'clock in the afternoon. I got to go back and look. But it's sometime on Monday. But nonetheless, we do have the ES Mini, S&P, in essence, futures contract that's moving higher, has been moving higher with less relative weakness out here. If, in fact, now, that being said, I can easily make the case that the ES Mini ought to pull back to 2078. You're at 2088 right now, so about another 10 points to the downside out here. Doesn't have to, but that would be a logical area for the ES Mini to pull back to and perhaps find some support there. So again, from a momentum standpoint, we got 2 of the 3. We can take a look at the Russell 2000 as well. Again, I've got a 10-minute delay on this chart. You can see it also has been moving higher with less relative momentum, less relative strength out there. And if you don't think that makes a difference or anything, just look at the bottom that came here on Sunday evening inside of the Russell 2000 as it formed one huge hammer candle and price was moving lower with less relative momentum, right? It's the absolute one of the single best tools and indicators out there for momentum. It sucks with regard to volume. It doesn't give you any information with regard to volume, but with regard to one of those important legs of your trading decision out there, you want to make sure that you're aware of it. How about that? I wasted all that time on that, and we didn't get to the liquidity piece of it. Well, let's go do that when we get back from this break. We're going to go take a look at your friend and mine, the Euro-Japanese yen currency pair, because it is one of the ultimate liquidity indicators. And it's kind of signaling to me there's some problem lurking around the corner. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 83, S&P's down off up 8. They say down, up 83. S&P is up 8. So let's go take a look at, we've taken a look at two of those important legs of any table that you would build when taking a look at and analyzing the stock market, a specific trade, a currency, a commodity, anything it is that you would be doing out there. And the third leg that you want to take a look at, is liquidity. Now, liquidity and volatility on an individual stock, what you would typically be doing is looking at something like Bollinger Bands. You'd be looking at Keltner channels. Standard deviations are another way to do that. So there's a number of different ways that you can analyze that. I'm actually taking a look at a tool that's for you to help you and I understand what's going on in the overall market out here. And this helps to answer a question that came in yesterday, I believe it was, that I didn't get to. And that is by looking at, where did I put that chart here? Radio show double this here. If you take a look at this chart, now this is a daily chart. Inside the upper panel is the Euro Japanese Yen currency pair, and the bottom panel is the S&P 500. Now the blue lines here, because I'm showing a line chart and going back into the 2000 time period out here. This is just simply the closing price, so it's not showing us the upper and lower open, the high, the low, the open, the close. It's just really taking a look at the closeout here. And back in about 2002, is when the euro yen currency pair really began tracking our stock market. So I like to use this as a liquidity gauge, and it still works. And the cool thing about this currency pair is that, one, it's a nice confirmation when price is moving higher and this currency pair is moving higher. Then from a liquidity gauge, we know that it says, hey, there's plenty of liquidity. When the currency pair is moving lower, making lower highs out there, lower lows, and our market is doing the opposite, what I have found, and it's not 100% of the time, but it's such a high probability period of time that you just do not ignore it. It is a precursor to a problem ahead. Unfortunately, what's really too bad is I've not found a way to consistently have it give us a message as to when. It just tells us it's coming. It's it's like, and the best that I can correlate it to is like living here in Florida. It's a hurricane. The hurricane comes off the coast of Florida, comes off the coast of Africa. They give us you got what, 6 or 7 different trackers. None of them usually are right, not until it's right offshore. But they give you an approximation as to when the hurricane is going to hit. And so this really helps us with an approximation. You can see right back here at about the 2002, 2003 time frame. We just take a look at, as an example, I'll just draw I'll use a line tool out here. We'll just grab any color. So I'm just going to use a green arrow. We'll use it for moving to the upside and to the downside. So, you can see this correlation out here in the markets. Look at from 2009, to, in essence, to where we're at. We saw this currency pair, or I'm sorry, we didn't see the currency pair. We saw take that back. We saw our markets moving higher out here. But the currency pair really didn't begin moving higher back until about 2012. So you can see there are periods of time. It wasn't actually too bad, because back here, I take that back. The currency pair, hold on a minute here. If we come back into the time period, the currency pair was bottoming in January of 2009. See how this thing here made a double bottom? Let me use a different tool out here. Let me use a different, give me a moment here. We'll just make this a white arrow. See how this was making, in essence, a double bottom pattern here? And what was our stock market doing? Our stock market was moving lower. And when we see these kinds of divergences, it is the currency pair that really is the one that's communicating to you and I what's going on. Well, if we fast forward to today, what's going on inside the market out here? Come on, work with me. We can see that since the euro yen peaked out right around the beginning of the year, December of 2014. So if we take a look, you can see the highs to the lows out here. We're still basically making lower highs inside this currency pair. And for quite a while, from the December time period, up until really this August time frame out here, the market was moving sideways to slightly higher, right inside the S&P 500. We're basically trading right around inside the S&P, where we opened up the beginning of the year out here. And if we take a look at right now what's currently going on, see this current pattern here with the euro yen continuing to move lower. Yet, and we did have one correction. So what I can't tell is whether it's over, right? This was moving lower. It was one of the reasons why my clients and I had taken a short position, not last week, Monday, but I think it was the prior week on Thursday or Friday, when we went short the market. We closed out that position. I shared that with you out here. So we certainly did have that one big move down into last Friday. But, if we continue to blow it up, what we can see here, if I just actually go back to the currency pair, let's go take a look at what it's doing right now. This thing has been trading off. So it's a real headwind, right? The market moved up nice and higher, earlier this morning. And what is this currency pair? This is a monthly chart. Let me put on a daily chart. What has this currency pair been doing all morning long? All day long? It's been moving lower with a wide-ranging bar. And what this says to me, in the face of our markets moving higher, the currency pair is telling me it wants to get down to 129.29, maybe 126.09. And I just know that it is just a, without this thing turning around out here, it's just a huge warning sign. And it's a huge warning sign not to be ignored out here. Unfortunately, that means that we've got, signals that are conflicting. So it makes me a little conflicted out here. That's why at the end of the day, look at the summation index out here, the price oscillators, are they going to be above zero, or are they going to be back down below zero? Now, if they're back down below zero, what we had, just like we had at the swing points as an example, where you can get up there and you can test it and you can reject it out here, we'd really have a rejection. And boy, this would be telling us that maybe the market moves down into the Thanksgiving time period. I know most people will tell you that it's going to move up. There's just something that's lurking out here. And I can't put my finger on it. Actually, I can. I just put my thumb on it and my finger and actually shared it with you. So we'll see what the end of the day looks like out here. We took a look at that 120-minute chart. So we know we've got an idea as to where price ought to move down to, at least in this retracement here. But it's a long period of time. We could see a nice bounce going into the close. I don't know. If we take a look at some different levels of support, right, some different demand areas, supply and demand areas. Let's just go back to I don't want to use the 120-minute charts. Let's use the S&P as the example. And if we take a look at the S&P, we're right now down to, it looks like, give me a moment here. So we can see the top of the box, top of the daily box, the blue area, which was priced at 2,088. That's held as resistance. And we know that this is a strong area of resistance. You might say, how do we know that? The cool thing about, let me pull this up here, and I'm going to go ahead and turn a couple things off. Makes it easier for you to see. If we take a look at, let me turn off the weekly as well. We take a look at just the daily boxes up here, which means for me, this is a better indicator from understanding roadblocks inside the markets that we trade, horizontal roadblocks inside the markets we trade, because when that point of control is closer to the top of the box, just tells us that the sellers are really lined up in this area out here. It also tells us that when price closes above that those sellers have just been trampled. It helps you and I to understand who has won that battle. If we take a look at that point of control, that's the area where price is most comfortable with. That's at about 2,078. Now, what did I think when I had the 120-minute chart, I gave a price of give me a moment here. I'm looking at a different screen. 2078. How about that? And that was not even using the daily profile out here. So we had price that was moving higher, doing less relative energy, less relative momentum. It's backing up. We had that dark cloud cover, on a range scale of 1 to 5, with 5 being the strongest of a bearish reversal signal. It's like a 2. Doesn't mean you don't pay attention to it, but the dark cloud cover is like if you lived in Florida, maybe I don't know what it's like in your state or where you're from, but our weather forecasters down here, they get paid a lot of money for basically not telling us a whole lot, because they're usually wrong with regard to telling us where it's going to rain, when it's going to rain, and so on and so forth out there. And if you're a weather forecaster, I'm not really taking anything out on you. I think it's hard to do when you're on this beautiful peninsula where you've got, water on both sides and you're not really that wide. In any event, so we know that we've got an area of resistance here. So what the heck am I talking about? Well, we're just taking a look at the market pulling back. So we've taken a look at three of our legs. If you just were able to master those 3 levels, you would do yourself a lot of good out there. You can add that fourth level being the energy or the angle. One of the best tools out there for doing that. It is the art of timing the trade charts out there, where David White created that power law vector indicator to help you really measure the energy in between legs. So in between swing points, that is a great tool. You've got the MACD, as a tool that can help you to manage that as well. The parabolic SAR. So there's a number of different tools to help you to understand the energy or the angle as to what's going on. In any event out here, let's take a look at some other things in the markets out here. Let's take a look at, as I just scan the charts to see what's going on. Let's look at a couple of these things here that are moving to the upside and to the downside. So let's take a look at Chipotle Mexican Grill. It's off $12 right now. Now, Chipotle's had a nice session yesterday. Volume-wise, good volume to the upside here. Did about 1.1 million shares. You know, the problem with Chipotle, I don't know if you're in this equity. It's got, you know, a huge island top out here. That's an island top that took place after July 22nd. So there's a lot of people stranded that are in this equity between the price level of about 700 to 750 out there. And they're screaming bloody murder out here today, certainly with the trading down around $598. Now, what Price is doing out here, let me turn off these profiles. Give me a moment here to undecorate the chart. And what Chipotle is doing is really trading back into an area where it had broken out. So the actual breakout day looks like July 21st out here. We're going to see the prices trading below that. But, you know, when we take a look at breakouts, you really got to go back just a couple of days before that where you see a swing point. That really gives you the breakout area. And we can see that price moved right into there. 579.81 looks like the number. That level is held as support. The breakout, 2.2 million shares, and price moving back into that area with 1.5, with 1.2, 8, 5. You know, so it has not been. So basically, what Chipotle has done is it has come back and it has found support at an area where it broke out, and it broke out with volume. And that, to me, volumes, when we take a look at volume, that the best tool, absolute best tool on an individual stock. And inside these index ETFs, not so much. And again, my theory is there's ways that I can teach you how to use those volumes, but it's different than the way that you and I look at a volume bar on an individual equity chart. And it may have something to do with high-frequency trading. It may have something to do with hedge funds and using those vehicles. I don't know what it is. I just know that they are not reliable. This is reliable. Being able to see a stock gap down, come down with volume, it's very easy to go back and identify those areas where we're going to see the battles that are fought. And when those battles fail, you just simply go down to the next level. You're always looking for areas of support and or resistance, even like inside the general market. So we look at the longer term chart since we're at the end of the week out here. If we take a look at the strong dog out here, the NDX 100 right now finding resistance at the green horse. Let me do this here. Let's clean this chart up just a tad. Give me a moment to do that. And as we take a look at it, we'll turn off the monthly horizontal trading range boundary lines. Look at that, 46.97. That helped us to understand where there's a significant area of resistance. And on top of that, we've got the secondary rising price channel that's out there. So this is a really significant level of resistance. If the NDX, or when the NDX gets above it, it's going to head back to its all-time highs at 48.16. If it pulls back and it finds support at about 46.97, then it will head up to its next level. Its next level being somewhere around 57.72. Let's go out to Paramus, New Jersey, to Victor. Victor, thanks for calling. Thanks for holding. You want to take a look at ticker symbol X, and that is U.S. Steel.
That one and FCX, both of them, X and FCX.
FCX. Okay,
no,
so tell me what.
I want X2. Tell me what X is going to do.
Tell you what it's going to do. Well, let's. Are you in this? You're just looking to get in. You're just curious.
Just looking. Shopping. Well, I'm going shopping.
Going shopping. Okay. Well, this is on sale, so there's no question about that. The question is when is it going to go off sale? And if we take a look at U.S. Steel is trading below. It's basically new all-time lows out here. So it's going to be very tough for me to tell you where this thing is going. The what I show is the all-time low. Well, it won't really be all-time low, but how about the low since March of 2003? It's trading below that level. My chart only goes back to 1991. We know the U.S. Steel traded before that time period. But right now, if we just take a look at the charts out here, it's trading below the low, which is not that low back here in March of 2003. It's a monthly chart, was at $9.61 out here. I would just say that, it's probably best to look elsewhere. I just don't see where you're going. What's that?
No, if they raise interest rates, won't that kill companies that have a lot of debt, like FCX has a lot of debt? Wouldn't that make them go bankrupt? And you remember Bethlehem Steel, they went bankrupt.
It depends on what their debt structure is. It depends if it's a floating interest rate or a fixed interest rate. If it's a fixed interest rate, no, it won't.
Okay.
But Victor, we're about to go into break. Can you hold on?
Okay.
All right. We'll be back with Victor, and then we'll go out to Philadelphia. Talk about gold with our man, John. Be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 89, S&P is up 8. We're going to go off to John in Philadelphia. John, thanks for calling. Thanks for holding. How you doing this afternoon?
Hey, Steve. Thanks for taking the call. I wish you a good weekend upcoming.
Thank you. Same to you as well. And tell us what you're doing in gold and how I can help you.
Wanted to ask you, first an observation on gold. Of course, we're at 1077 currently.
Yes.
Steve, last July, gold made a new swing low, 1073. It made that exact same low on November the 12th and then bounced Then,
Yes.
of course, we had the high on Sunday. Monday went to new lows, but we've come back above. I just wanted to ask, do you see any reason to think there is a tradable rally coming?
If it closes above 1090.60, I would join you on that rally, and it needs to do that. And I'm just simply going with, well, first yesterday yesterday concluded a historical end for gold in that at least as far back as I could go, gold had never had 15 trading sessions in a row where it had closed lower than the open of the trading session. The longest run was like 6 or 8. So we know, therefore, I would conclude that a oversold bounce was due. There were a number of other indicators that would suggest that too. Now, if gold can close above 1090.60, then you're back above the lower box of our TAS market profiles, both on a daily and a weekly. And then from a tradable standpoint, I say, you know what, I could see where just even a counter trend rally could take you up to the 1125 area. And it would be, in my opinion, it probably would be worth a trade, whether it's the actual metal or there's a handful, like 6 or 7, 8 individual mining equities that look pretty good, that have done pretty well. So, I would say that would be the way. But if those profiles hold, then and some of this natural buying, is certainly coming because what both you and I know is that the commercial traders have been exiting their short positions out here. So they become natural buyers as they try to close those out. And I'll be curious today, as I'm sure you will, sometime after 3:30, as to what do those positions look like as of this past Tuesday? Have they continued to move they move so rapidly. If they move as rapidly this week as they did the prior week, we're going to get down to levels where other bottoms have formed, and I'd sure like to have them at my back as well. So that's my initial take when I take a look at gold. If it breaks through this area, then maybe it's at 1041. Or maybe it's even at 917, and I use that by looking at the horizontal trading range boundary lines out there. And on a monthly basis, 1041 is the midpoint, and 917 should be some really solid support if we were to get back down there. So that's just really taking a look at both sides of the trade. And I would also say that gold priced in euros hasn't done anything. And I like taking like a gold priced in euros out here because it's subtle and most folks aren't really taking a look at it, at least on this side of the pond out here. And that actually, the level of support that I'd like to see that get down to is about the 987 area. So that's my initial observations. What other thoughts do you have?
I'm focusing on that comment you made off the top. 15 consecutive days in which lower highs were made.
The close was less than the open. The close was less than the open.
Right.
Yeah.
Given that we've gone and we've run out of downside momentum potentially, I can't discount the idea that was a climax of bearish sentiment with that price pattern you're talking.
Could be. And if we see it get above 1091, we'll be in good shape. Hey, Johnny, have a great weekend. Good Thanksgiving.
Thank you.
You bet. Take care, folks. Stay tuned. David White's up next. Have a great Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.